So you've probably heard the acronym PAYG, but always wondered what it meant. Usually it's used by employers or by tax professionals when talking about the way an employee is paid. So let's have a look at what it actually means. So PAYG stands for Pay As You Go. And what it refers to is the way that you're taxed during the year out of your wages by paying a little bit of tax every week as you go during the year. So what you'll notice on your pay slip is you'll have a gross amount of wages, a PAYG amount, which is the Pay As You Go income tax that's withheld by your employer and sent to the ATO on a regular basis. And then you'll have your net wages, which is how much you're physically paid by your employer. So the best thing about PAYG is you don't actually have to do anything. Everything's done by your employer. You just sit back, let your employer take that out of your wages and remit that to the ATO on your behalf. Now, at the end of every year, you'll do a summary or reconciliation of all the PAYG that you've earned on the wages that you've earned, and that'll create either a tax payable or a refundable position. And usually we find most people are in a refundable position. Now, one really key item when it comes to PAYG is make sure when you're completing your new employer form that you tick whether you want to claim the tax-free threshold or not claim the tax-free threshold, depending on how many jobs you've got. So what I mean by this is if you've got one single job, definitely claim the tax-free threshold. If you have multiple jobs, then you can only claim the tax-free threshold on one job, not each of the jobs. That way, come tax time, you'll be in tax the right amount, and hopefully you'll be in a refund position, not a payable position. So what does PAYG mean again? It is pay as you go, and it refers to the tax that's being withheld out of every pay that you get from your employer and remitted to the ATO on your behalf.